Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The market bulls for the Australian dollar keep climbing as the risk appetite views the direction to the 65-66 cent area. And this is where the market is looking where the 60-day moving average is, which is roughly around the region of 65.70. In light of the pattern, the upside target still remains around 65.55.80 and with a cap around 66.35. Reassess from there, as if the market does break above that level, then we've got to reassess where the market can go next. Are we heading up towards 68.70 cents? But in the meantime, we may see a little bit of profit taking coming back into play here, as we've seen over the past. When the 60-day moving average is challenged, we can see that there is a little bit of indecisiveness in terms of direction. Looking for the outlook to the euro, is the market still claiming and climbing to fresh highs. That is now just breaking above the recent 3-week highs around the 101 area. We're looking now towards the objective of 101.85 to around 102.55.75. Meanwhile, the dollar index, which measures the greenback strength against a basket of 6 major currencies, remains weak as it fell towards the lows around 109.22. In light of the pattern, the market is still keeping an eye on in terms of how the dollar is progressing and remaining weak after last week's jobs data come out better than expected. And all eyes look to Thursday's closely watched US CPI data, which may also come in a little bit weaker from the previous, with August at 8.3, September 8.2, and with a forecast at 8%. The other factor that the market is looking to is now waiting for the midterm elections. So we've still got a little bit more data to come out, which could still weigh on the US dollar. Any pullback, I feel the market should look towards 100.30 to 99.75 as support. The dollar yen bears cheer as the market claims the 145, now looks towards 143.40.60 as a potential target. Reassess from there, as we're currently declining. We're getting a little bit oversold, but the trend is coming back into play here to the bear case and supporting the market for this slide. Any advances should find a short-term cap around 145.80. Having recently searched, the market did stage a minor pullback towards low 114, but thought better of it and rebounded, and currently sitting still towards the target of 115.90 and on towards 116 to 118, as I feel the technicals are still somewhat strong. Any weakness should again find support around that low 114.30.40 area. Overnight, spot gold fired up on all 4 cylinders as it surges 2.3% against the greenback, and now heading, since claiming the area of 1,700 to 1,729 to 33. Be a little bit on your guard here, as back in September and also in late September, the market found good supply around this 29 area, and we may see another rejection from 1,729 to 33 and then see a repeat pattern like before, all the way back down to the bottom side of the range around 1,620. So until we get a clear break to ignite the market higher, I think we've pretty much nearly made our move since the rebound from 1,620 and a good 100 points. So therefore, the market should eventually dwindle its demand. But that being said, if the dollar index does break 108, then that could put the gold back onto 1,760. Wrapping up with oil, well, the market plummeted overnight and lost 3% after the recent rejection from 92.80 area. The market is now looking back to the support area. Now a break of 87, sort of around about 55, could see a further slide down to 84 to maybe even $81 a barrel. So keep an eye on that. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the rest of the day.